Great. Hi, everybody. Thank you for tuning in to this session, which is called How to Be a Great Investor. We'll be exploring what makes a great partnership between venture capital investor and a company and its founders. I'm joined today by Debbie Wosskow, OBE, an entrepreneur, founder, board advisor, and author, amongst other things. She is the founder of AllBright, a career network and club and community for women, as well as the founder of Love Home Swap, which was sold to Wyndham in 2017, and in which our other guests' fund, MMC Ventures, was an investor. We also have Victoria Ferguson with us, who is the general counsel and partner at MMC Ventures, which is a leading seed and Series A investor based here in London, which manages both EIS and institutional funds. Thank you both for joining us today.
You're welcome.
Great. So we really wanted to explore today what makes a great partnership between an investor and a VC fund, and what makes a great investor and a successful investor. And perhaps we can start off by just looking at how a VC can differentiate itself and how it can present itself to a company, and when it might start doing that to give it the best prospects of a successful partnership over time.
Victoria, do you want to go first?
So the way we start to meet companies is usually from a very early stage. It might well be, two people and their dog at that point, and we meet them perhaps at founders hours, perhaps through one of the accelerators, and get to know them, get to know their business. They in turn learn a little bit about us, and it's usually quite a long process. It might be 12 months or so as the company grows. They're meeting milestones well, to which before they reach a point where we can begin to think about investment, and we can see how they've got along, and also in turn they get to see us. Do we only float when there's good stuff around, or actually are the things that we're doing in the meantime? If they think, as they're getting slightly bigger, little intros to people, perhaps a coffee here or there, again trying to deliver something a little bit helpful, and that's part of the way that we show our understanding of the business, again bouncing ideas off, putting out some of our insight work and saying, look, we actually know your space and we can recognize your company within that. So it's quite a build up of time. So by the time the company's reached a point where we might want to make an investment and do some diligence, we're quite well known to them, they might be quite well known to us. They're undoubtedly doing the same with other funds, and that's great. The days of a solo VC making an investment at an A round are gone for mostly. There's usually at least a couple of people in there, and if nothing else, creates a bit of competitive tension for the founder. But yeah, I would say it's that early stage build up of a relationship, and hopefully a bit of trust as well between the founder and the VC.
Look, I think from my perspective, and just to frame this conversation, it's an interesting relationship between an investor and a founder, and I mean interesting in terms of both, positive and challenging. It's always a dance in terms of making sure that you are building a relationship and you're on the same page. And as an entrepreneur, what you look for are people with track record. You would always want to speak to founders that they've backed before, to find out how they work and what the relationship is, and genuinely what it's really like. Of course, you look for value add, and the things that are most helpful for a founder are network. There's some of the things that bigger funds are now starting to build out, which can be really difficult for a founder to access in early days: talent, and sort of ancillary support to kind of help to get you going. But broadly speaking, you want to know who they've backed, who they want to back, and who's in the family, because those are the things that make a difference to your life. There's also just a lot of stuff that matters to me now as I get a bit older, wiser about how people show up in the world. One of the things that I will always look for in terms of either people who are backing me or when I'm backing someone, because I'm also quite a prolific angel investor, is diversity in the team. And that has been, a huge transformation since I started out as an entrepreneur in 1999, where I never saw a woman to ask for money. In fact, the only woman investor that I'd ever had a conversation with in the early days of Love Home Swap was at MMC, which was the only fund that had a woman. So I think that those sorts of things become more important to founders around how people show up in the world. And I think also, again, this perhaps comes with experience. I want to know how a fund has dealt with things going wrong for a founder and for a business, because I think, like any relationship, it's all great when it's going well, but there will be moments in time in the life cycle of the business where it's not going well. And I think that's particularly been the case in the last couple of years, obviously, where many businesses, and AllBright, my day job, has been through some really challenging times. And you want investors who are supportive, who are creative, who are able to pivot with you, who've got a broad enough mindset to think about how a business might change. Because I think the final thing is that the business on a day of exit is never the same as the business at the moment when the fund invested. And the best investors have got the flexibility of mindset, operations, connections, perspective to follow that journey with you. And I think more than ever now, after 2 years of pandemic, that's what sets the great investors out from the good investors, is their ability to flex with the world and with the business.
Great. And do you, there's a lot there, I think, Debbie, in terms of those different aspects of getting to know how an investor shows up in the world, as you say. Do you think that's become more challenging at the moment, where in some parts of the market there's this increased sort of velocity and speed of trying to do transactions?
I know we read about that a lot in the press, but that just hasn't been my experience. We read about a wall of money and deals getting done in 10 days. And I don't think that that's most founders' experiences, and I don't think it's most funds' experiences, particularly not in the UK. I think that it's still and should be a relationship that's built over time. I would really caution any entrepreneur who feels excited because they're able to close a deal in 2 weeks. You wouldn't marry the man that you met 2 weeks after you've met him, and it's worse than a marriage, in the sense that there's no way out of it, right? So you really have to due diligence, not just the fund, but I can't overemphasize the importance of the partner, like who is going to be on your board, because again, like anything, it's about individuals and relationships and chemistry. And actually, I have had, without naming any names, in my current business, where we've raised quite a lot of money, partly because what we're delivering is real world, it's property as well as digital. We have definitely had conversations with people where the track record of the fund looks great, and then we've met the person who would be on our board and just gone, no. Like, we couldn't work with them and they couldn't work with us. And I think perhaps you have a bit more of that confidence when you've been around the block a few times, but I would really caution younger founders to think about that individual and that relationship, because it's really important. Chemistry and communication are everything. You're going to be in a room, on a phone with that person. And I think you want someone who's a real advocate for the business. I think the other thing that you just get more experience with, that Victoria will know as her day job, is how funds work. How personalities within funds work, how people have different levels of seniority within a fund work. It's really important for a founder that you've got someone who believes in you and is backing you, because the thing that matters most about the right seed and Series A investor is that they can help you to raise more money. And if they're able to follow on, particularly from seed to Series A, that they do, because if they don't, it leaves you in a really terrible position. And sometimes those decisions are difficult decisions. They're collegiate decisions within a fund. So yes, DD the fund, don't get it done in 2 weeks. I don't sort of believe that that's happening more often than not anyway, but do really work out whether you can spend time with the individual and whether that individual has got enough clout within a fund to ensure that with every box tick performance, that you're able to continue to build a relationship with that fund.
Yeah, I would say the one area perhaps where venture has got a bit faster is with the amount. It used to be a kind of, you'd meet some people and you see a business and you got excited about it, then you learned about the market and the competitors and so on.
Yeah.
What got faster is we've got better in saying, right, these are the areas we're interested in, these are specializations. So when we meet either like cold outbound, and we've had some great successes in kind of finding areas and then companies and making investments in that way. But it does mean if I'm actively looking for companies that do X, and so when you meet them, you can slot them into your mental jigsaw much faster than I suspect when Love Home Swap turned up. We probably had spent quite a lot of time figuring out kind of the holiday market, exactly, and what it would be.
I agree.
So
I think MMC from the outside, I would say, and one of the things that's been great to see in terms of the fund really coming of age, is much easier for me to say, these are the things that you're brilliant at and really interested in, have specialisms. And I think that would be my observation about venture and indeed PE, where we have raised some money now, in general, is that there's just more of it. So people are able to be more specialist, and people have had successes in certain areas that they build upon. I think that the inbound has been a bit more, I don't know whether this is just me because we do a very certain thing, but I think we definitely get way more approaches from people who say, I really like this space, we've done these other things in this adjacent space, do you want to talk, than perhaps, even a decade ago where the market was a bit more generalist. Is that fair, Victoria?
That's totally fair. And I think many funds are reaching out and saying, with our specialization, and actually, again, as a benefit to the founder, we know intros. We know intros as customers, maybe for you. We also know intros who are up the further up the line when you want to do your next round of funding, who are you most likely to go to. I would say, talking about kind of the walls of money and how venture has changed, of course, we now have many more corporate venture arms and other people who have not traditionally been in venture coming into the market. And I would suggest for founders, one of the things to also look at is, on one hand, being backed by a corporate venture capital fund could be great. It can work very well if they're closely aligned with what you do. It could be a really good route out for your final exit. But you also need to watch, and back to Debbie's point about who's on your board or who's going to be your point of contact. Often on those venture arms, some of them genuinely are staffed by venture specialists, and their bonuses and their commission entirely relate to how well the fund does. But many of them aren't. Many of them are somebody who's there for 2 or 3 years. It kind of sounds interesting, but their next post will be on something else. They'll migrate on to something else. It's held slightly at arm's length from some of the rest of the business. And so some of those promised intros don't quite land, or not in the way that you hoped. So again, with anyone who's from a sort of that slightly different background, corporate background or some other thing, again, it's back about diligencing the fund. What are they actually going to bring? Who's going to be there? And again, just taking your time perhaps a little bit in assessing, are they going to be the right backers for you, or is it simply the first thing you received, or because it was such a really well-known name, you're like, well, clearly this is the way to go.
I think the other thing that it's easier for me to take a more sort of long-term view on now is the constitution of the board and the relationship between the VCs and the chairman and the entrepreneurs is really important. I think when that works really well, it really does help to fast track the growth and the corporate conversations around the business. And I think there's a whole separate topic around how you choose a chair as a founder and what the chair does and whose chair is it anyway. But I think in Love Home Swap and in my current business, that relationship between the chair, the investors and the entrepreneur is very strong. And I think that is also something that you would expect the right fund to help with. So yes, talent, but how the board is constituted, particularly when you get to an exit, really matters. That's part of consistency and this theme around how you show up in the world and about how you act as a team. That matters as well. And I also have had experiences of being on boards, on a particular board where all of that chemistry was completely off. I wasn't the founder, but it was a NED position, and that is a nightmare. So I think just, really think about that. Just think about people and relationships, and ensure that the fund that's investing in you thinks that way too, because that's the stuff as a founder that sucks the life out of you if it's wrong.
Yeah, a chair who can whip the votes around the boards and kind of manage them is extremely useful, because what's always interesting is that the chair position is almost unknown in the US, or it's taken by the CEO or by the founder. It's a very different dynamic.
Yeah, we just had that experience very recently for AllBright, where something we were looking at, it's like, yeah, exactly that. I'm the CEO and the chair. Just governance is completely different. I think when you have a very professional chair, and I've had two, David Kelly, who chaired Love Home Swap, and Alan Layton, the king of chairs, he's my chairman now. It makes such a difference to be able to get decisions at the highest level around potential M&A or funding round, the big decisions. That's really important as well.
Yeah, it's why it's always strange when you end up explaining that to American funds or founders. You've been reading a lot of American blogs, and don't get there at all. It's real difference.
So how early do you both look to bring on a chair? Because it's something that, from a sort of legal perspective, we often obviously encourage good governance and see the value of chairs, particularly at the time of an exit where you may have diverging views around the table as to whether it's the right time and the right deal and all that sort of stuff. At what stage, Victoria, perhaps first, would you sort of encourage your portfolio companies to look at bringing in a chair?
Usually just after Series A, especially now that Series A is such a large round. If they haven't got anyone in place, definitely within a few months of Series A.
Okay, great. Excellent. And so maybe then moving on a little bit to how VCs can support and stay close to their portfolio companies as they go through these successive rounds. You get larger cap tables, may not have a sort of board seat or an observer seat. How can VCs best support their portfolio companies? Or is it a matter of perhaps dropping back a bit and allowing the company and the infrastructure and the management team that's there to really drive things forward?
Well, shall I talk to that a bit, Victoria? Yeah. It's just based on my experience. Without sounding like a stat record, it is all about relationships. So I have had experiences where some of my earlier stage investors, who then become very diluted and either lose the board seat completely or have a lot less sway, are people that I'm very close to as sounding boards. Actually, because they have a bit less, like they still have a lot of skin in the game, but when people are starting to write really big checks, it does change the constitution of a board, and it does change the nature of the conversation. And it changes everything for a founder. If you're doing it right, when you raise your Series A, really, depending on how many of you there are, but just take the sort of founding block and the company. And if you've done your angel round properly, and you should still own a majority stake in the business, and you should probably own like 60-70% of the business still, versus when you're starting to get Series B, C or PE, and the founders are down at 30% and the seed fund's down at 5% and the new investors are up, then it completely changes the dynamic and the value of someone where you're completely aligned, but they've been with you since the start, is massive. Also the value of the chair. So I wouldn't underestimate the power of relationships and guidance and input. In a way, it's a little bit easier to have those relationships as honest upfront relationships as you go through things, as opposed to some of the later stage investors. I think what you look for, being an entrepreneur is a totally weird life. So much of what goes on is in your own head. You look for guidance and counsel and input and connections and people to bounce things off, and they're quite rare. And if you've done it right, then your Series A investors should be those people. And so I think it's that. And I think, life's all about trying to put yourself in someone else's skin and walk around in it, To Kill a Mockingbird style. And sometimes we're not very good at that from either side of the conversation, because everybody has their own objectives, and the investors have very clear objectives and the founders have very clear objectives. But the ability to do that and to be relatable is extremely powerful and valuable, particularly when you get to the point of exit, which is so high pressured. Nobody's really their best selves because everybody's got a lot to lose. I think having people in the mix who can genuinely help you is really powerful. So I would say, and I see this against my peer group of mates who are founders, some of whom now are at very late stages in the journey of a business, either to IPO or to a mega exit. They're often still very close to their seed and Series A investors. I think that tends to be a more honest relationship sometimes, and a really important one.
Yeah, so I would say, how do we stay close to founders? I mean, the flippant answer is WhatsApp. Yeah. I mean, it's exactly that point of, you can be on the board and there's lots of great stuff to do in that very formal capacity, and there's also lots where you're off the board, you're on the call, you can have the informal chat. As Debbie says, we're a Series A, so often, yeah, absolutely, of course we're diluted over time as the companies are growing. That's what we want them to do, and we've come off the board because there are other companies that we need to be on the board for, where we can really be helpful. The bigger the funds, often again they get a little bit more distant from the founder in exactly the way that Debbie described. What we've introduced as another way of trying to support our founders is we've built out our community function, and we have a lot of, particularly for the senior team and for CEO, of founder groups, of calls, of peer-to-peer conversations of the person who is either right there at the moment or has been there on that journey a little bit ahead of you, and can be, as Debbie says, it's incredibly lonely position. For founders, even where there's more than one founder, it's still a very lonely position to be able to speak to somebody who's been where you've been. I would imagine is extremely useful. And we have a unique peer-to-peer mentoring system as well. So we have our CEO groups, and they've come and gone, and people often find that, again, somebody they really connect with. Perhaps the businesses have a similar model or in the same sector. And further down the business, and the peer-to-peer mentoring, again, is helpful. Being able to have these informal conversations, the stuff that's separate and private, and just from somebody who's been where you've been.
Great. And how do those relationships play out, and how does an investor sort of best help, or how do you, Debbie, in your case, how do you feel an investor could best help in those really difficult circumstances? For example, if a product hasn't worked, or trading is well off of forecasts, or there needs to be a change in the management team, how can investors and management teams best approach those often difficult circumstances?
I think long fuses and deep pockets are pretty helpful, right? I think that where those situations are really difficult, and I look at the last 2 years, I look at the AllBright business as an example. We have 4 buildings, they were all shut. We had a building site in New York, shut, and there was nothing, anybody, no matter I can pretty much move mountains when I put my mind to it. There's nothing that could be done. So we had to really work on the digital business and what we could offer and how we built up the subscription, and totally changed that. And it needed investors who could move with that. And in the case of AllBright, that was actually quite a difficult ask for them, because that wasn't their background. So sometimes the things happen and a business can move and shift. And I think investors who can accept that it moves and shifts. I think there's just another point, that they're putting yourself in someone else's skin. If investors are worried about something, then they need to recognize that the entrepreneur is 1,000 times more worried, can't think about anything else, can't sleep, can't eat, can't, we live, it's our whole entire lives. That was something that was a challenge with us with the pandemic, because our biggest investors had a lot of investments, and our chairman chairs a lot of companies. And I think it's just human nature that and I think it's an extension of Victoria's point. The big board calls are frankly generally a bit of a pain in the butt, particularly because it's the first time that the investors are really logging into the detail, and they're asking you questions as if you've never thought about it. And sometimes they're something to be endured. The real stuff gets done on WhatsApp. The real stuff, like the real help, advice, support, picking up on conversations, reflections from great people just comes during time. So I think that long fuses and a long-term view is really important. You don't want to have taken money from a small fund, because what a lot of funds had to do during the pandemic was to put more money into the businesses that they backed in some shape or form, whether that was a bridge or convertible debt, or, you know, some people managed to get money from the future fund. And that, I think that sort of flexibility when things don't go right is important. And I would really caution actually an entrepreneur to take money from a tiny fund or that didn't have a range of different funds. Because I think when you do face unprecedented times, to use a very hackneyed expression, you kind of want people who can be there with you. And I think this has become a conversation that was never a conversation for 20 years of my career around entrepreneurs and mental health. I think the recognition about how hard it is quite important. My current chairman, who is a real sort of grandee of chairs and seems quite gruff, is actually very good at checking in. And Anna, my co-founder, and I really value that actually. And I think that sometimes it's the little things, because of the loneliness of the journey, and because when it's hard, it's really hard. Sometimes it's the small things that you really remember. And I would really encourage investors to do this. You know, it's the WhatsApps being supportive, or it's the little email, or that my chairman's a great one for notes. We keep them all. It sounds sort of ridiculous, but when it's really, really hard, small things can be very uplifting. And I think recognizing that it's all about communication and relationships, ever more so when things are hard, is really important.
I think that's true. I'd also hope that the relationship that's been built up through the good times and through that initial excitement of making the investment then meant that when an investor is delivering a message which is hard to hear, that the entrepreneur recognizes that it is well meant, that they don't just seek those investors that back their own view of a situation, that it's absolutely the business is your business and your baby, but the advice is not necessarily personal. It's not meant to be digging at somebody. And again, best delivered, the advice, even a hard advice, is going to be about, right, what is going to work best for the whole situation. So I accept everything that Debbie says, and also then suggest that the founders have surrounded themselves with people to whom they're prepared to listen and take that advice.
That's great. Well, listen, both, that has been an absolutely insightful and fantastic tour on how founders and investors can work together and best support each other, and the human touch, I think, really sort of seems to trump all the rest of the bells and whistles, I think, in some of this, in terms of making sure that these relationships are ultimately productive and the best things for the businesses. So conscious of both of your time. So thank you both very much for joining us today. It's much appreciated.
Thanks for having us.
Thank you.